Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about profit tent, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
Good morning, Ernie. Yeah, and I just caught the tail end of what you were saying, and I just actually did that this morning. I put on a 30 wide fly and call fly, and I just squeezed out a quick $2 and got out of there. It didn't even get close to my. I had an experience the other day with a wide fly, and I was like, let me try it again, and it worked again. I just got out real quick. Took a quick profit.
Yep, you can make good money on those wide flies. It really comes down to, how can I best explain this? The temerity, the courage that you have to do that. It's not really even courage. It's still taking the same kind of risk. It's just a realization of the different type of trade that you're going to get, or the different character of that trade and the opportunity. You know, when people first come in, they really think that's the goal, is to get into the profit tent. How can it be the goal when getting in the profit tent is a vast minority of the cases? Just think of the odds. If we're in a 50-50 trade, first of all, only 50% of the time is it going to go towards our profit tent. And then of those times that it goes towards our profit tent, 75% of the results are going to be outside the profit tent or just inside, because those are going to generally be those 1% moves. So that leaves only 25% of your winning trades that are actually going to get into the profit tent and affect any kind of bigger result, which is really only 12.5%, because it's half of the total possible moves, right? So that doesn't make sense to sit there and play for getting into the profit tent only 12.5% of the time. You're hoping that's going to happen because that will be a good result and result in much larger return, but it shouldn't be the goal. It should be one of the possibilities that will happen. You just recognize that the greater possibility is what you're going for most of the time, and that's outside the profit tent. A good majority of those outside the profit tent are going to offset your losses, and enough of them will raise your capital into profit. But those medium and larger moves, those liar moves that happen 12.5 or 5% of the time, are the ones that are going to really elevate it. That's just the nature of this strategy. Most of the time, you're looking just to grab those small profits. And the reason why you're doing that is to take advantage of that asymmetry so that you can control your drawdown and the volatility of your returns. Because I say this all the time, that it's preservation of wealth over profits. That is our number one goal. And then the process. Our goal is to preserve our capital. It's not to lose. Because when you start going after just trying to win all the time, that creates incredible amounts of volatility, and that's where most people falter. It's not that we're not going after making profits. It's that we recognize that it's the roundabout, that you need to have the foresight and awareness and understanding that's the way it works, that the market will only give us those when it wants to give it to us, and it doles it out in a pretty regular fashion. You just have to accept that's what the fashion is, or that is what the distribution is, right? You're accepting the distribution of returns. You can't force it. When you try to force it, you might be getting some of those returns, but you're also going to be getting a much larger loss on the other side. And then the volatility of your returns go up. Pro traders, big money managers, they're all about the balance between volatility of returns, drawdown, and return on capital. They're trying to maximize both. They're trying to keep the smallest possible drawdown and volatility of the returns while achieving the maximum return. But they have standards where they have to keep that volatility low, because they know that if they don't, it's going to be extremely difficult to achieve their ultimate goal, and that's to continue to increase their profit. I'm just laying out for you what are the proper ratios, what are the things that you should go for in terms of that volatility and drawdown in order to keep yourself in the game so that you can continue to strive after those bigger returns.
Thanks for watching guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks guys.